As requested, a lot of you guys from my free Discord have said, look, I want you to do an in-depth trade breakdown into what you're seeing right here. Now, what I'm going to do to start, I'm going to play the 1 minute snippet or fast forward version of how the trade played out, and then we'll get into an in-depth breakdown. With that being said, guys, sit back, relax, and enjoy this video. High to this low.
Yep.
If I just mark this out, 0, 1, let's do this, and 0.618. That's it. That's all I'm kind of looking at. Like if we don't hold the range, then obviously we'll sweep the all-time highs. Then we're going to have to wait a little bit. But the idea here would be if we hold the range, if we either hold this or this area, then we look for shorts again.
Yeah.
Second continuation to these relative equal lows. But that's kind of it. I still consider that SMT. I prefer it be completely different, but it still could be a consideration here to look into.
Yeah.
Let's see if we get another big down close candle. We'd need another big down close candle here, and then you look for a closure below here or impulse through here, and then the stop would go above the body there. It's been formed already here. Let's just see ISD, see how this works. So what I want to do now, I want to actually go into how I formulated a narrative of going short, especially because we're at all-time highs. But what were the confirmations that I used? What timeframes did I use? What PDRAs did I use? And you can see some on the screen here, but I want you guys to focus on one thing. And the one thing that I like to preach and teach is you want to be doing what's reasonable based on what the market has already done. So I want you to look at the market here and have a look at price action, how we just keep moving up and up. In terms of market structure, in terms of liquidity, the market is moving higher, forming higher highs and higher lows, but we're building all of this low resistance sell side liquidity. Liquidity drives the market, guys. And what's reasonable after the market has been moving up and up and up and up and up, pretty much all session, the Asian session, we're expecting, or I'm expecting, some kind of reversal or some kind of pivot in the market. And what better time to have that pivot than during a macro? That's the whole basis of this trade. Now, something I mentioned to my premium members yesterday was the use of standard deviation projections. Typically, I don't do this, but I thought it was quite an interesting topic to discuss yesterday because it worked out quite nicely. Now, what I'm going to do, I'm going to go to the 15-minute chart. I'm going to scroll over across here so you guys can see, but I want you to look at this previous price swing. So obviously the market opened up yesterday in the Asian session here. We formed this previous price swing like this. We have this FVG or fair value gap. You can see how we respect that. We push higher, and honestly, for the rest of the day, it's just grinding. There's no shorts, there's nothing to take. Be patient, wait for the next session. What I'm looking at here in terms of the standard deviation, I'm looking at this previous price swing, this previous downward swing, this downwards move that then puts in this large expansion. And all I'm going to do here, I'll show you guys, I'm going to mark out from this body to this body like that. And my standard deviation projections, I'm going to go here. I've got 2.5, 3, 4, and 2 marked out. Now, typically, you might have heard ICT talk about between 2 and 2.5. That is where most reversals happen. Statistically, here's the thing. Statistically, at about the 4 mark or 3 mark, that's the 3 level, that's the 4 mark, pretty much most markets have some kind of pivot at that level. Anything above that is rare. It can happen. But if you've seen the market grind up and grind up and grind up and grind up or grind down, that standard deviation projection can be used to anticipate when the market might reverse. So I want you to first keep that in mind, the standard deviation projection. And if you marked it out with like a vertical line or horizontal line, I should say, have a look at where that lines up to right here. And if we go back onto now the 1 minute chart, you can see how price reacts quite nicely from that red line. That red line is the 4 standard deviation projection above. So we're starting with that. And then we're moving on to the macro, which is the first one, 1250 to 110. During this macro, I want you to have a look at what I've marked out, what price is doing, what it's done. And the important part when you're considering liquidity, imbalances, fair value gaps, all these type of things is when you sweep liquidity and you're expecting a reversal, does price automatically reverse or does it reject that liquidity point? So having a look at the market here, you can see we form buy side liquidity here, we sweep it, but do we keep pushing higher? No, we reject here. The benefit of this, guys, is that obviously we've got that 4 standard deviation level, but we're also in this macro from 1250 to 110, a little bit before the London Open session. But this first macro is going to phrase what we did in the second macro. That's really important. So we have this, we sweep buy side, we invert this fair value gap with displacement. That's perfect. That's beautiful. That's what you look for, right? Now, I said to some of my members that this was a pretty good short position from here. Stop above these bodies, targeting this sell side liquidity, targeting 10 and then running to the lows. But we didn't get that run to the lows. So the second trade actually got that run to the lows. But why is this setup here still favorable? And why enter from here? Why not enter from there? Entering from here is not enough confirmation for me. There's not. Because how do I know with certainty, with greater than 70, 80% certainty, that price won't just respect one of these fair value gaps and go higher? I don't have the confidence there. But once price breaks down again, and once price closes beneath more green candles, I'm more confident that price probably wants to move lower enough to get that 1-to-1, enough to get that 10 handle trade. So hopefully that makes sense. If you have questions about this, feel free to leave them in the comments below. And if you like this video, guys, and you like these breakdowns, let me know. I enjoy making them. And I guess this is a way for you guys to see or to look into my mind in how I approach the markets. I offered a nice little scalp and then break even stop. As the market entered the next macro, you can see what happens here. Now I've got a few things marked out. This is that original inversion. That's from the previous macro. We pull back up into that here. As you guys can appreciate, if you're London session traders or New York session traders, or even Asian session traders, you might have seen the markets in the past couple of weeks and thinking, some of the market conditions are a little bit choppy. And I agree, especially those in the Asian and the London session. So I want you to have a look at this. I'm going to draw a dealing range from this swing high to this swing low. I'm going to mark that across. And what I want you guys to focus on, and this is a big part of looking for this short position here, is how the bodies respect the optimal trade entry. Go back to the basics. ICT mentions the wicks do the damage, the bodies tell the story. What are the wicks doing here? The wicks are tapping into this inversion. When was that inversion formed? In the previous macro. Write this down if you're still here. One macro can then continue into the next. So this first macro offers the initial reversal or the pivot. The next macro follows the first macro structure and reacts from an imbalance or a fair value gap from that previous macro. That's a really good price signature. Write that down. So we do this, we pull up, we respect this area. We also form SMT at these highs. So the NASDAQ here forms lower swing highs. If we go over to the ES chart and just go back to the London session, obviously a massive drop off yesterday, but have a look at this, right? Now, a lot of people don't consider this SMT. I do. So what you can see is that the ES chart had equal highs. The NASDAQ had lower highs. I personally still consider this SMT divergence. I do. And the NASDAQ forming the lower highs technically means it's a little bit weaker. It probably wants to go down a little bit stronger, but both go down anyway. It doesn't matter. You could have traded both, but I prefer to trade the one without the equal highs. That's pretty much it. So we had SMT at the highs. You can see that SMT. We had an inverse fair value gap. We had price in the macro, also in the next macro, 150 to 210. Perfect, perfect, perfect. And then all I was looking for to discuss the short was a change in the state of delivery. And in this case, we get a really nice secondary inverse right here. That's it. So in this macro, we're looking for what's happened before. I'm using the fact that the market has been stepping up pretty much the whole session before. Pretty much the whole day, we've been moving up and up and up. At some point, the market, guys, has to reverse. The market likes to rebalance. It can't keep going up forever. It can't keep going down forever. It has to actually reverse and pivot at some point. But when? When will it pivot, Ruben? When will it reverse? How do I know it'll reverse? You'll never know 100%. Please keep that in mind. But that 4 standard deviation level is one way to tell it. But what else? If you don't have that standard deviation, all you're looking for is multiple macros to align. Multiple macros to align. So you don't trade this macro because it's too risky, but you wait for the next one. And because the next macro respects the previous macro structure, you have confidence with relative equal lows and one down here too. And you simply do something like this. Enter from the change in the state. Stop goes above the bodies. Very tight stop. You take 10 handles. You hold a runner to some lows. And then you trail your stop and get stopped out. That's it. Now there's many other setups on this session. You could have taken longs from here. That's fine. But as the day goes on, you're going to see, guys, that ICT macros Whether you're trading the London session, the Asian session, doesn't matter. They will give you really good setups. Like look at this. Look down here. Look at the time frame, 750 to 810. You go into the time frames, have a look over here. 30-second chart, nice scalps long. Go over here. Nice scalps long. So you're going to see these setups apply pretty much every single session, even here, right? A nice power 3 macro. So you got these things happening, and I wanted to do just a little bit of a breakdown into why I was looking for shorts, even at all-time highs, how I anticipate the market may reverse or retrace, and then also how I navigate that as a trader. So hopefully you got insight from this video. I don't really want to have complex, strategies. My strategies I like to see as very simplistic, but if you want more of these, let me know below. If you're not yet subscribed, hit that button, leave a like on this video, and I hope everyone's had a great week as we come to the end of the week. Until next time, guys, I'll talk very soon. Peace out. And if you haven't yet checked it out and you want to join the free Discord, the link is in the description below. With that being said, guys, I'll talk very soon. Have a great weekend. All the best.